Hello there everybody, a very good morning to you all and welcome back to howtotrade.com. Welcome back to another live stream here in our trading room today and across our X channels, LinkedIn, Facebook and YouTube as well. I hope everyone has had a good weekend and is ready for a brand new week in the markets, because brand new week in the markets means brand new opportunities. And we're going to be diving into some of those as always, like we in the same sort of structure that we always do on a Monday morning, which is really just going through the economic calendar, having a look at the main high impact news events, get a feel for how the week will be shaping up. If I know it's going to be a really busy week, then I know that potentially we're going to get lots of market movement, and therefore that just gives me an idea of how much activity I'm expecting in the markets. If it's going to be really quiet and it's going to be a bit of a pause week, then really there's no rush to jump into any trades. We know that from doing this bit of analysis that we do on the economic calendar, and just because there might not be high impact news events doesn't mean there won't be market moves, but it just gives you a clue, it gives you a bit of a heads up. It's all about trying to get ahead of the game in trading. That's what we're going to try and do. I appreciate it's a Monday morning, it's probably a bit early, but you can watch this stream on catch up as well. But if you are around, feel free to pop up and say hello, like Marco and Bobby. Hello, very good morning to you, and I hope you're doing well on this Monday morning. So let's just dive straight into it, shall we? No need to waste time. You guys want to see what we're expecting for this week. So if you just go on to our economic calendar at howtotrade.com, and then you go on to impact, high impact is what I care about more than anything else. And then we go to the next 7 days. What you get is the high impact news that we're expecting from when's the last day of the week? Is it the 21st or 22nd? Sorry, excuse me. 23rd, no, 22nd. So all the way from up here, November the 20th down to November the 22nd is what we care about. That's Monday, so ignore that. That's next Monday. So if we start at the top, what are we at today? We're at the 18th. So that means we don't actually have any high impact news events until November the 20th, which is Wednesday morning, where we get the UK CPI figures. I think on Wednesday I'm scheduled to release a cable pound versus US dollar article, so that'll be a good day for me to release that. So I'll have a good trade idea for you for Wednesday, 7 o'clock in the morning. We've got inflation out of the UK. It's quite important. Thursday, Bank of Japan Governor Ueda speaking, RBA Governor Bullock speaking. Again, that's not a great deal going on, is there, until that point? Okay. Retail sales on, and this is Friday now, so we're already on Friday. We have PMI data out of Germany and Europe, which is basically taking up all of the stuff here. Yeah, it's just basically a PMI day. All of this PMI data. So yeah, there's in terms of economic news events, it's pretty dry. It doesn't mean we're not going to get market moves. I just wanted to point you in the direction of this. I think it was Biden, Ukraine, missiles. Here. A little bit of concern over the weekend. That concern came here. I just want to keep an eye on this, because obviously the articles and headlines come out from this all the time, but this is caused a little bit more of a stir than probably people than normal, should I say. And that's basically Biden has allowed Ukraine to strike inside Russia with basically US missiles that they've provided to them. So long-range missiles that have been supplied by the US to Ukraine, Biden has said that they can use them basically to strike Russia. The move marks a major change in policy for Washington, which previously had refused for months to agree to Kiev's request for authorization to use the missiles outside of its own borders. And this is what Putin said in response to that, was that, or previously warned that if Western nations do something like that, they sanction using weapons to direct, like against Russia directly, not just providing money, which is sort of like indirectly, but like, and it gets a bit silly, but direct participation, then that would be an escalation in the war, basically. So yeah, interesting to see how this story materializes and if maybe other countries follow. But that was the news that I saw over the weekend, which was a little bit worrying. Yeah, I would say worrying, to be honest with you. A lot of people saying that, oh no, this could be World War III and all that sort of stuff. And it's important to keep a clean head with it. But yeah, that's something that we should bear in mind. And I think when we woke up this morning, we saw quite a risk-off mood, to be fair. And that's probably why we see the stock market's a little bit down on the day. But you can see that starting to move into areas of support now. And really, when I came on and I wanted to show you my trade ideas for today, let me just quickly check the room, just check I've not got any questions. Hello to you, Ivy. Could I have your views on gold and silver, please? What do you think the reason for the pullback is? I think that the dollar is still very strong and has more strength in its near future, so I expect gold and silver to continue to fall in the near future. Yeah, we'll take a look at that. We'll have a look at gold and silver in just a second. The reason I want to take a quick look at the stock market is because I've been patient with it, pretty much not touched it since the US elections, because I was waiting for this. And now we are sort of in my area of interest. In fact, we are now tagged into a buying opportunity on the US 30. And I believe I posted this one in the room. Was it last week? On Friday? Yeah, look. Oh, wait, no. Yeah, US 30. That was Shane's one. Boom. There it was. That was the analysis. Update today is that we've now been tagged into that. So that's... I'm not going to go into any more, as in I'm not going to actually buy any more stock indexes. I'm going to see how this one goes. I've only put 1% risk on it. So we'll see how it goes. But, if you look at the NASDAQ, for example, that traded quite aggressively down toward the 61.8% Fibonacci retracement. Also right into this EMA 36. Had that wick below, a bit similar to what we saw back in October. We saw what happened after that when Trump won the election. But anyway, and you can actually now see that this is now... I'm going to wait to see where this daily candle closes. I'm not actually going to buy this because I've already got exposure to risk assets, and you should only really expose yourself to one at a time unless you're going to halve your risk. So... And to be fair, actually, I did halve my risk. I've only got 1% on it. So I'm going to wait for this candle to close today. I want to see if it closes above the 61.8, because that reaction from Friday down into Monday was quite a good one. But it did breach temporarily, below the 61.8%. But if we can get a close above 20,400 today, then I'm going to look to try and get involved and, well, trade it up. Just follow the market structure. Okay. What else have we got? Yes, gold and silver. So, Ivy, you was on the stream on Friday, I believe, when we spoke about gold and silver. Okay. The reason for the pullback is just market structure. So, if you actually look what's happened here on silver, for example, market's traded higher, right? And then what's happened here is if you look at, always mark your recent low and recent high, because that's your market structure. There's the low, okay? So in silver's case, we actually haven't had a break of this low yet. And until we get a break of that low, I would still class this as being bullish in structure. Yes, the dollar is strong. And yes, that is the reason why we've seen, or one of the reasons why we've seen a sell-off in commodities. But it's not just the dollar story that does that. There is also other factors that influence gold and silver prices. Anyway, if you look what's happened here, we've just mitigated this imbalance area and grab the liquidity of this low. So this is actually quite a bullish move. And that's why when I look at these markets, what I'm saying is that I believe that if you're going to be bullish on commodities, it's best to be bullish on silver. And I think this is a great potential opportunity to go long with something that looks like that, okay? Or go down onto the lower time frames and try and get a bit of a better risk reward ratio. You could do that as well. However, gold, if we analyze the market structure, you can see the previous low down here was broken, okay? And gold has gone lower, again, mitigated into this imbalance area and now started to trade higher. But the structure on gold, for me, is now bearish because we've had a break below the recent market structure low, which is there, which is good news for the bears. So if you're going to be bearish on commodities, I think it's best to be bearish on gold. However, you don't just see markets, even in this bullish run, you don't just see the market go higher and higher and higher and not ever pull back. You see it pulls back a little bit. So I was always expecting at some point, which looks like it's coming now, we were going to get a move up to some of these key levels, the 38.2, for example, or the 61.8. And as traders now, what we need to do is look for evidence of a reaction in some of these levels. And so, although I'm not buying gold up to these areas, I'm going to look to sell at some of these areas. But if I'm going to buy any of these commodities, I'd buy silver, and that's my analysis on that at the moment. So the reason for the pullback is just simply markets don't go trade in one direction. They always will form a structure of some sort. And what's happened here is we formed our low, and now we're about to potentially come and form our lower high, which might be here, might be here, might be here. We don't know that just yet. We've got to keep an eye on the price action to see where the evidence of that comes in. You're right about the dollar though. You can see that the dollar's bullish, but it's a similar sort of thing. We're now sort of at a risk. If you look at the broader market, if you actually look at the dollar, it's been trading between 99 and 107 since December 2022. And we're now reaching the top of that. So it wouldn't surprise me if at some point we get some sort of liquidity grab, either at this high, maybe even a move back down towards 103, 104, which would support commodity prices, by the way. Or what happens is we consolidate for a bit, maybe even pull back, but then we get a breakout. Now, either of those situations are viable, and that's why I'm going to wait to see what happens now with the dollar index to see if we get a clean breakout above September 23's high. Because if we do, we know we're bullish we know we're actually structurally long-term bullish on the dollar. But if we just sort of wick into that area, and then we see example of a liquidity grab, we could definitely see a move back down towards 104, and a lot of these guys now piling into dollar, buying the dollar when it's quite expensive at these areas, I think is a bit of a risk. Just to give you a quick update as well, I've been looking at oil for quite some time, and I'll end the stream looking at oil. You can see my trade is running nicely. I'm now trading at 1.76 to 1. It's been a bit of a struggle, but I'm in the trade. And actually, we're now seeing this head and shoulders. We're now seeing a breakdown below this neckline of the head and shoulders, okay? Oh, the neckline is, you can see this dotted line here. You can see where we are right now if I zoom in on that. We're getting a breakdown below this neckline, which is a good sign. If the daily close is below this neckline, if you're not in the trade yet, you could trade the head and shoulders pattern by waiting for a retest of the neckline and then trading it lower. And that's what I'm looking for. So to give you an update on trades and stuff, I'm currently long on the US 30. I'm short on oil. And to be honest, I'm in enough trades at the moment just to sort of let the rest play out. So I'm not too interested in buying the dollar at these expensive levels just yet. I want to see how it interacts with that swing high. Hello to you, Danish. Marco, I agree. As long as the USD is continuing the strength, gold will go on the other way. Yeah, it will. But as you just saw from the dollar, dollar there is a risk that this could be a bit of a pause week or maybe even a pullback week in the dollar. So I'm not... The jury's out on that one a little bit. So, yeah. I'm already short on oil and I'm already long on the US 30. So I will update those trades as we go throughout the week. I'll also post some analysis in the room. It's a bit of a quieter week when it comes to economic events, but we may see some volatility come through anyway. But anything that comes out, I'll always update you on that. And if you have any questions and anyone wants to ask me anything, then I'm also here as well. And that just leads me to say I hope everyone has a fantastic trading week. And I'll be active in the room and stuff anyway, so if you do need me, then feel free to reach out. Until then, trade well, trade safe. Let's have a good week.